Listen, just because you've got a small account doesn't mean you can't run the wheel strategy. Here are my favorite cheap stocks for June to run the wheel strategy on. Yo, what is going on, premium chasers? I hope you are having a God blessed day today. Every single person that comments down below is going to get the rolling playbook, which is a must-know skill when you are running the wheel strategy. So if you want that, just drop a comment. I'll purposely respond to you with that rolling playbook. And while you're down there, hit that like button and that subscribe button. But guys, today we're going to be talking about the cheap wheel stocks that I'm paying attention to in June. Now, just because these stocks are cheap, guys, doesn't mean that they're not high quality companies. You guys typically know I like going after higher quality companies, not the super speculative stuff. But of course, we got to sprinkle a little bit of the degenerate stuff in here and there. So first one that I am paying attention to is Snap. I have not invested in Snap for quite some time. I got pretty burned with a Snap a few years, many years ago at this point. And I'm sure if you've been an investor for any period of time, you probably have as well. But I really like Snap right now because we are trading decently below the 2 and 300 day moving averages, right? We also have a kind of like a support level here at $7, and the premiums are looking pretty nice on Snap. So let's go take a look at the chain right now. Now, it's not in a position just yet, in my opinion, for cash secured puts, but it's starting to set up nicely, and the volume has been really, really good on Snapchat lately, which as option sellers, we want a lot of volume, obviously. So I'm going to go just out 30 days right here, and we could take a look at what kind of premiums we're actually going to be getting. Now, there's obviously not a ton of stuff right now. Obviously, we have the 8s, which is the really the only one that we could honestly get into. But with that said, it's because Snap hasn't hit that level in a decent amount of time. So you can see we're collecting $29 here on the $8 put that expires in 30 days. Obviously, this is for educational example only, guys. These numbers are constantly changing. So let me go ahead and just zoom in on my cash secured put calculator to see what kind of return we're getting. So we're getting $29, and we are putting up $800 in collateral. So in my opinion, that's why I love this kind of play, right? We're getting a kind of a riskier kind of return here on our collateral. But in my opinion, it's still a fantastic stock, right? It's been getting beat up for the past few years. I always love to go over to the financials and look at the cash flow before I even jump into anything. And I can see like it's been getting better, right? They did have last year kind of a bad earnings, but this year and the trailing 12 months is definitely looking up, okay? And if we go, what I always like to do, guys, as well, especially for these kind of like more speculative, cheaper stocks, is I'll always go over to Earnings Hub and I'll just type in the ticker here as well. I always want to go look, especially when earnings are because I don't want my cash secured puts or my covered calls honestly expiring during earnings week or the week after earnings week. But I always like to look here about on like the earnings, right? And have they been beating estimates, right? And that's why I always like to go in here, okay, and look. So we could see that the past few times they have been beating estimates, which is a good sign for the company, okay? They didn't have the an insane Q1 2025, but they still beat estimates, right? Which is a good thing, right? It's still slightly overvalued, obviously P around 46, but as far as like cheap wheel stocks are concerned, I do like it. Free cash flow is decent, not fantastic. It's Snapchat. It is what it is. One of the biggest plays, in my opinion, with Snapchat and why I like the company, kind of like on a side note, is because it pays its creators probably the best out of all social media platforms, and that's really one of their biggest plays, is that they're able to pay out a lot more for like when you go on like Snapchat or if you use it. You'll see like all the different content creators are constantly posting on there, and they're getting a large sum of money. So Snapchat is number one. Second one is one of our favorites, and is Kraft Heinz in our private community, especially. So Kraft Heinz obviously trading at 26, a little bit more expensive on the expensive end on the stocks that I'm going to share with you today. But come on, who doesn't love their Heinz ketchup? And the premiums are still looking pretty juicy on Kraft Heinz. It is still set up, in my opinion, for a decent cash secured put. So obviously go do your own research. Trading well below 2 and 300 day moving averages still. Trading well below, and you don't see this a lot right now, guys. You don't see where it's trading below where it was in April. So it's currently at 26.74. So still in a fantastic setup, in my opinion, for cash secured puts, right? And plus, obviously, it's not just Heinz ketchup. There's like hundreds of brands under the Kraft Heinz umbrella. So taking a look at our options chain here, if we go to sell put, and go out our 30-day expiration, let's take a look at what kind of premiums we're actually going to be collecting here. So actually, let's go out a little bit further. Let's go 36 to see if we can get something a little bit better. So you can see 26s, you're getting 26 is $54. 25s, you're getting 27. Let's look at the 25 delta. So 0.20 on that delta. Let's toss this into our covered call calculator. So you're putting up $2,500, obviously, for the Kraft Heinz, and you're collecting about a $27 in premium for just about a 1% return. So obviously not the best here on Kraft Heinz. Like if I was going to jump in, it would most likely be on if it comes down a little bit further. But then at the 26, this again is starting to slowly become a more high conviction stock for me at the levels that it's currently is at. I just don't see Kraft Heinz going much lower. That's my opinion. Obviously, go do your own research. But I would most likely look at the 26s here because obviously we're getting a decent premium return as well of $54 on that. So jumps that up by, to 2% from 1%. So Kraft Heinz, again, has been really a big one in our community across the board. And, it's a cheap stock. So, $2,600, $2,500 locking up and starting to put that to work for you on a monthly basis, in my opinion, is still fantastic. Moving on to the next one, and this has just crossed onto my watch list, is Upwork. It had a big run up recently here, which is kind of what caught my eye here when I was like, okay, this thing is just going to come back down to reality. And now we're starting to slowly come back down to reality. All right. Now I was waiting for this to see if we started seeing this big pullback when it hit this top area, because I always like to, again, I'm not like a day trader by any means, but I kind of like to look at like some basic patterns and see kind of like what the past looked like. So when I saw it jump up here and I was like, okay, look, it hit this resistance level of around 1740. It basically hit exactly on it where it did back in February 2025. Basically, like literally right there, hit that 1750 and then just started retracting down. So I'm staying patient with Upwork. I want to see it come back down, obviously below the bottom Bollinger Band level. But if we can get back down to this like 12, 13 level, I'm going to be looking for cash secured puts. Now, going into Upwork here, let's take a look at what's currently being offered. Obviously, the premiums aren't going to be as juiced up right now because we are still in that upper Bollinger Band area because of a big run up. You're not going to see a lot of options, right? This isn't a very highly traded stock that's not as active, right? So with these kind of situations, it doesn't mean you can't sell options. And this is one of the reasons I want to show with you guys, like some of the plays that I do where I'm like, they're like kind of boring, but like it is what it is, right? So in this case, like I would look at like the 23-day one. I'm like, okay, do I love it at 15? Okay, if so, I can collect $30 in premium, lock in $1,500, right? For me, I don't love it at 15. I want to get it back. I want it to come back down towards that $12, $13 range. So in that case, like I may go out further. I'm usually not going to go further out than like the 50-day mark. If I'm not able to get it in at the price that I want, right? Like even the 1250s here, I'm only collecting $5 for the 1250s. That to me is not worth it. Again, when we start coming back down, which maybe, it's starting to trend towards that level, then those 1250 puts are going to dramatically give a lot more premium. So I am heavily watching this, and I do see this, at least in my opinion, dropping down towards those 200 and 300-day moving averages, where I would like to do like the 12s or 1150s, depending on what the premiums are looking like. Next one is Intel, guys. One of my favorites, love-hate relationship, but still one of my favorites for doing the quad option strategy stocks. As we know, the market has had a pretty decent rebound, guys. And with that decent rebound, it's slim picking out here, all right? It's slim pickings out here. But in my opinion, Intel is still in a great position, right? Trading well below both its not super below its 200-day moving average, but decently below its 300 of $25, and still right in the middle, right in the middle across the board, RSI, middle Bollinger Band, right? But it's not that far off where it was around 18 in early April when we saw a big pullback in the market. So this is a good company just because obviously, it's great for quad options because of the fantastic dividend that Intel offers. Fundamentally, do I believe in Intel long-term? I couldn't tell you yes. I'm sorry, I couldn't tell you yes on that one. Short-term, next 3 to 5 years, I don't mind owning it. I do think, you know, it'll be a bumpy road for sure. But do I believe in this Intel like real long term? Would I be bummed owning it for like 10 years? Yeah, probably. Yeah, for sure. But as far as like plays that I'm looking for, like these short-term plays that I'm looking at, it's decent, right? So I'm going out 30 days on here, and you can see premiums are getting decent, you know, decently here. Look, if we look at the 19s, we're collecting $39 on the 19s. So we're wrapping up $1,900 on this one, and collecting about a 2% return, which is fantastic in my opinion. Obviously, we're collecting that premium as well. If we get assignment, not a big deal, right? And especially at the levels that Intel is right now, where we can kind of, for the most part, it's like been in this area, look kind of sideways here for the last 6 months anyway. Obviously, it's had some real massive jump ups and peaks, but you know, if you've been trading Intel for any amount of years already, you know when Intel shoots up, like it's coming back down to reality real quick. Like again, that's why I have such a love-hate relationship with this company over the years. And then last one, of course, guys, you already know my probably now at this point next to Arista, which is like my favorite wheel strategy stock, is going to be SoFi. Not only am I a big believer in SoFi, the premiums are juiced up on SoFi. It's a company that I absolutely love the business model and products of, and in my opinion, whatever, it doesn't matter. Do your own research, but I do love trading SoFi. So taking a look at the premiums, these are going to be the nicest of them all. Whether it's trading at the middle, top, wherever Bollinger Band area, the premiums on SoFi compared to the other plays today are going to be really, really good. So if we look at, you know, let's say the 12.5s, we're collecting $45 on the cash secured put side, 45. Also, all these calculators, guys, are free inside of our Facebook group. Join us. It's a vibe. Introduce yourself. We'll give you all the templates, everything you need here. Everything is free on the channel unless you want one-on-one time. And I think you can agree that that's fair, right? So 12.5, we're locking up $12,500, right? For a juiced up return of 3.6%. Now, this is a lot more of a risky play, right? These numbers are constantly changing. Obviously, these numbers are going to look a lot different, but understand this, guys, right? When you are trading or selling options and you see juiced up returns, they're juiced up for a reason. You're not just getting there is nothing free when you're selling options, buying options, investing, anything, right? Pretty much everything is priced in. Everything is priced in, right? So you have to understand, why am I being given this premium? Well, because SoFi is a lot more volatile of a stock compared to a lot of the other stocks that I shared with you today. Also, what you need to understand is how to roll your positions. It is so critical. So if you want to learn how to roll your positions, drop any comment down below. I'll personally respond to you with our rolling playbook so you can really start thinking that way in terms of managing your positions with actual confidence. Drop a comment down below. Also, if you are somebody that's interested in our 1-year-long incubator program, where you get a more hands-on approach with me and our absolutely amazing community of premium chasers, click that link down below in the description of today's video. There's about a 30-minute training there that shows you what the quad option strategy is all about. And if you like what you hear and you want to join our community, you'll be able to book a completely free, no high-pressure sales call with us and our team. So again, that link will be the first one down below in the description of today's video. Guys, remember, sell options, collect premiums, repeat. I will see y'all tomorrow.